I will directly continue, and I will ask the audience to give one last warm digital welcome to Patrick Lowry, who will tell us about the kickstart of a new Bitcoin ETF or ETN.
Good evening, everybody. Can everyone hear me fine?
We can hear you fine. We can also see you fine.
Wonderful. Can we see the presentation?
Both, you and the presentation.
Even better. Well, thank you so much for having me here today. It's always a pleasure to speak at the Crypto Assets Conference. Really a shame, Philip, that we weren't able to get this one really together in person. These are always quite fun and some of the best crypto blockchain networking events I've ever been to in the world. So really appreciate the opportunity to speak here. For those of you that don't know me, my name is Patrick Lowry. I'm the CEO of Iconic, as well as the Cryptology Asset Group. Just by quick way of introduction, everything we do underneath the Cryptology and Iconic brands is in the name of driving the adoption of crypto assets. Iconic is a crypto asset management group. We manage regulated index products. We've been doing that for a couple of years here in Europe, offering diversified exposure to crypto assets. We also have a multi-manager platform we run out of the United States, which basically offers alpha generating exposure for actively managed strategies for different investor groups. And what we are more famous for, I think, just recently is the issuance of a Bitcoin exchange traded product that is now trading on the Deutsche Börse as well as SIX in Switzerland. Continuing on that, Cryptology itself is Europe's leading publicly traded holding company for blockchain and cryptographic assets. We've made investments over the last couple of years in the likes of Block One, Northern Data, Iconic itself. That's how I ended up in both of these positions. And Next Markets, which I'm sure is a company most people here are familiar with. Now, before diving into the ETP and everything, I wanted to briefly kind of just touch on crypto assets in general and really kind of make a case for them from an investment thesis perspective. I'm sure this is a lot of information that's already been rehashed over the last couple of days or earlier today. I apologize if this is a repeat of information, but nonetheless, I feel that this is so very important that it's worthwhile to drive it home. Most people probably on this call right now dialing in understand that Bitcoin has significantly outperformed literally any other index, any major index in the world, as well as most other assets. In fact, the only assets that over the last couple of years that have outperformed Bitcoin are in fact other crypto assets. Even on a traditional or logarithmic scale, Bitcoin has severely outperformed literally any other asset in the world. One of the other value drivers of Bitcoin, it is a very low correlation to traditional crypto assets. If you compare it to the MSCI, to US government bonds, gold, crude oil, literally any other asset class, whether it be emerging equities, blue chips, bonds, stocks, you name it, it has very little to almost zero correlation to any of these assets. With that said, it is a wildly volatile asset. Volatility goes both ways, the ups and the downs. Right now, we've had probably 35% of Bitcoin's market cap erased over the last couple of days, quite literally since Elon Musk decided to stupidly started tweeting about Bitcoin and Dogecoin, right? A couple of other Chinese factors involved there, but nonetheless, this is what we would in the crypto space probably just call a typical Monday, if you will, right? With that said, if you start looking at Bitcoin's allocation and putting that into a traditionally structured portfolio, I mean, regardless, it significantly outperforms those indices. It has a significant returns relative to these other asset classes that even a microcosmic allocation within a portfolio has substantial outperformance relative to more traditionally inclined assets or traditional portfolio theory. But at the end of the day, it's not really just about Bitcoin. And one of the things that we did at Iconic is we actually commissioned an empirical study with our friends over at the Frankfurt School of Finance and Management. Can't see you wherever you are in the audience, Philip, but hello, how are you? Always a pleasure. And what we learned is that by having Bitcoin and other crypto assets in your portfolio as a small allocation, either 1, 3, or 5%, and even continually rebalancing that allocation over every month over a period of time, that you had a roughly 84% increase to that portfolio construction in its Sharpe ratio relative to if you had just left that portfolio construct as it was. And this is actually kind of astounding, because this wasn't just taking Bitcoin or crypto a couple of years ago, putting it in and then kind of going, well, no shit, it performs better. But the risk-adjusted return of these assets, even when continually rebalancing on a monthly basis, ended up increasing across a wide array of portfolios 84%. Now, just to kind of prove this, we looked at 6 different types of standard portfolio construction. So the Norway 50-50 model, splitting between bonds and debt, Norway 80-20, more heavily on the equity side, traditional balanced portfolio, endowments, pensions, or even a family office portfolio. And what you can see here on this chart are the annualized returns on investment increases that you would realize if you had had a 1, 3, or 5% allocation in your portfolio to Bitcoin and other crypto assets. In fact, this construction of the basket was the top 10 crypto assets by market capitalization. Now, on an annualized basis, that's astounding, but even on a return on investment perspective, looking at a MOIC, it's astounding as well. You can see that you're basically tripling, if not quadrupling, the expected return that you would have over that period of time based on this empirical study that was conducted. But if you look at the Sharpe ratios for the exact same construction of the portfolios, even though Bitcoin and crypto assets are wildly volatile, you can see how objectively they enhance the performance of literally every portfolio construction, and they did so substantially. Even more so for a typical family office portfolio, where traditionally families have to have assets in liquid assets. They hold significant cash or treasury positions, different types of certificates of deposit so that they can maintain the liquidity of the family. But having liquid Bitcoin, having liquid crypto in their portfolio construction significantly enhance the Sharpe ratios of these as well. So at the end of the day, the narrative I want to get across here is that crypto assets really should be considered as a part of just about any portfolio in the world. I think it was even Goldman that has now definitively said that they view crypto as a bona fide asset class. And to be honest, from an institutional perspective, they're even a relative late mover. At the end of the day, Fidelity and a handful of other leading asset managers have been in this for a significant amount of time. And one of the things that I'm kind of always asked in this space is, well, okay, fine. One of the value adds of crypto is its inherent decentralization, the ability to remove intermediaries such that we can have a completely trustless ecosystem built around crypto. So the question I always get is, well, why the hell do we need you, Pat? Why the hell do we need crypto asset managers? And the truth is, they're not wrong when they say that. Basically, crypto asset management is kind of re-injecting an intermediary into crypto at the end of the day. It kind of seems a little bit counterintuitive given Bitcoin, Ethereum, and their inherent trustless, intermediary-less, and decentralized nature. I mean, in crypto, we always have this saying, not your keys, not your crypto. You don't actually own any Bitcoin that you store on Coinbase, for instance, just like you don't own the cash that's in your bank account. That's a liability on the bank side. That's effectively an IOU, right? Well, this is where we were actually surprised. So we helped sponsor a study that was conducted once again by our good friends at the Frankfurt School of Finance and Management and the group over at Cointelegraph, one of the leading crypto media outlets in the world. And they did a study last year, after reaching out to about 1,000 different institutions, family offices, etc., around crypto assets, and asking them if they expected that they would be investing in crypto, and also what the preferred method of exposure would be. And the response from the survey that they got, that they published in a research report, they ended up having about 700 plus responses, and 100% of the DAC family offices and asset managers and institutions that responded to this survey said that they are either already invested in crypto and in Bitcoin, or they expected in the very near future they would be investing in crypto and Bitcoin. And what was astounding for me, because again, it seems a little bit counterintuitive, 62% of these investors that confirmed in the affirmative that they were going to be investing in crypto or expected they would be, preferred to have an asset manager, a regulated, trusted counterparty that would manage the crypto assets on their behalf, even if they had to pay fees, whether they be delta fees, maybe 1%, 2%, or even a traditional 220 exposure in a more actively managed strategy. Well, this actually became very validating for us at Iconic. This is a pure validation of our thesis that people don't want to worry about managing their own crypto assets. They don't want to worry about the technical complexities of holding the crypto, the differences between warm and cold storage solutions, having to understand what a multi-signature wallet is, or God forbid, what happens if you lose your password or your private key. Well, so this is where we created and have recently issued XBTI out of one of Iconic Fund's subsidiaries. And we view this as an institutional grade gateway to have access and exposure to Bitcoin. So XBTI, otherwise known as the Iconic Fund's physical Bitcoin ETP, is an exchange-traded product that has been approved by our local regulators that is now trading on Deutsche Börse's Xetra, so the electronic trading and regulated market at Deutsche Börse, as well as SIX Switzerland. Every single one of the notes of this product is backed by a specified amount of Bitcoin, and currently it is the most cost-efficient structure for exposure to Bitcoin on Xetra. It has the lowest total expense ratio for any of the other products that are currently trading there. Each of the Bitcoin are backed by trusted custodians. We, for instance, use both Fidelity and Coinbase for the product. And we were actually lucky enough to convince State Street Bank itself, the world's largest fund administration group and custodian of traditional securities, to enter into crypto. This is their very first time being the administrator of a crypto financial product. So we're very excited about this. And the reason that we created this product is we wanted to have a very seamless way for investors and users to gain access to crypto, to not have to worry about having the nuance of cold, warm, multi-signature custodianship solutions, not to have to worry about what might happen to Bitcoin if they lose their private key or they lose their password. And also not even have to worry about going to sign up for a new platform, not having to go to Coinbase, not having to go to Binance, but rather being able to go to their brokerage account that they currently have and being able to buy, sell, and trade the asset, the underlying, or rather exposure to the underlying based on the financial product that Iconic Funds, BTC ETN GmbH, has issued. And this, at the end of the day, we'd like to think is an enhancement of a user experience of crypto. I've been saying this for years now, that one of the biggest issues with crypto assets, not only from an investment thesis perspective, but also from an adoption of the platforms, the companies that are building in crypto's perspective, is the lack of proper user interfaces and user experiences. And for what we're aiming to do as an asset manager, we felt that we were successful in enhancing the user experience of investing into crypto assets by creating this regulated financial instrument that is available on traditional stock exchanges. So thank you all very much for your time. I really appreciate it. And I don't know if we have an ability to take questions right now, but if we have a little bit of time here, I'd be more than happy to answer one or two.
Dear Patrick, first off, thank you. It's always a pleasure to have you in any way, to have you here in any way, even digitally. As far as I know, there are currently no questions.
Not a problem. We're at the end of the day. I think everybody's ready to go jump off. So really appreciate the time. Thank you so much. And I hope you have a lovely evening.
Thank you. I hope you have a nice week too. From my side, I thank you, of course, and the audience very much. I enjoyed being your host today. My name is Marcel Kaiser. Reach out if you want to reach out. And I hope you tune in tomorrow. Tomorrow, our topic will be the digital euro and identities. And it will be the last day. So let's have a nice last day of Crypto Assets Conference 2021A.